What's up, guys? So today I will be answering some questions. These are emails, and they may be sort of common questions that people have. So I figured it's best to make a video. I can sort of get a little more into it rather than typing the answer. So let's go through these questions. Hopefully you'll find them helpful. First one, who do you use as your ECN broker? I'll read the rest of the question. I was going to use TalentX, but it looks like it is not allowed for U.S. clients. Yeah, the U.S. regulations. There are a lot of brokers that we don't get to use. My second question is, who do you use for your forex volume feed? Okay, so as far as my broker, I was with FXCM. As you may know, they got sold out, bought out, shut down. So I was automatically moved to forex.com, and I was like, all right, let me try it out. So really, at least for the rest of the month, I'm sticking with them. The spreads are okay. Everything's been fine so far. No issues. So forex.com is where I am at the moment. I think come September, when I get back to trading on a regular schedule, I may look around and see what the options are. So, I mean, that's where I am right now. But it's been okay. I mean, going with the larger brokers, the ones that have been around for a long time, is first of all where you want to go. So there's no trickery and funny business. But also, it's really depending on what suits your trading, what works for you. And again, being in the U.S., we are limited. So yeah, stick with the big ones. You'll be all right. Every broker gets bad reviews online, so don't let it freak you out. Same question. Okay, who do you use for volume feed? Right now I'm using Admiral Markets as for charting, as you see here. I do like it, the volume, which I found this about a couple months ago. I do like to compare to other brokers that I know, but I'm becoming a little more trusting of this one, Admiral Markets, you see here at the top. And I also like the fact that I can get the MT4 on Mac. So again, for now it's fine. In September, I'm kind of going to do a recheck of everything as I get more busy again with trading. But check it out, Admiral Markets. I like it. Maybe compare it to some of the things you like. But the best thing to have is, more than one. If there's, a couple, another one that you think is dependable to have alongside, get the demo. You can have 3, 4. The multiple broker volume is actually in another question, so we'll get to that. All right, so that's what I'm using for now. So far, I like it, Admiral Markets. But it's good to check more than one. Okay. Next question. Thanks for all the great videos, too. I have watched. Okay, so he's asking, will the video course and my method work without a good volume indicator across different brokers? So yeah, again, I'm using just one broker or comparing a couple, but the multiple broker volume indicator, which is still something that ideally I want, we had it running off of a server and it was upwards of like $2,000 a month. So it was being reworked to try to lower the overhead there. And I'm not sure where he is with it at this point. But I have been perfectly fine with what I've been getting off of the Emerald Markets and single. But, I'll see. I may bring that back. For now, I'm just using this. I currently trade supply and demand and learning a lot about VSA. Okay, supply and demand. A lot of times is not really taught very well. It depends where you're learning that. I know it's been categorized as supply and demand, and that's like SAM side and stuff. That's really just support resistance. So hopefully you're learning the proper kind of supply and demand, which is really, not to get into too much, but it's not support resistance. If it's very similar to that, it's probably not supply demand. Calling support demand is not really supply demand. Okay, so and about VSA, right? And with me, with my trading, again, I learned all this stuff like when I really got into it, maybe like 2007, and there was a lot of information became available online, and the wyckoff stuff, VSA, supply demand, learning about markets in general and how they work and why price moves and what makes price move and what's the forces behind that in any market, the housing market, any market, and I ended up really with my own method, which is, you may say is a little more straightforward. There's not a lot of terms to learn, and it's more sort of focused on understanding what's going on, and it's not so much following a method, because that's really what it comes down to. Not to go too much off on a tangent, but I like to clarify that, because people that are learning my material may say, well, what happened to, this VSA terms? I didn't learn that in the course. Not that anybody has ever said that, but, it's missing some wyckoff terms, some VSA terms, but you'll see that I do use some. And again, it's just trial and error, years and years of like, I'm going to figure this out for myself, because when I just follow other methods, there's sometimes it's not completely consistent, or it's not making enough sense, or I'm seeing things that are just going against what the method is telling me. So I have to work in what I'm seeing in my experience, and, kind of worked in together everything that was working and left out a lot of stuff too. So I'm going off on a tangent, but just to explain like sort of what exactly I'm doing. As only trading with supply and demand, I lack consistency in my results. Yeah, and again, not to like diss Sam Seiden, or maybe that's who you're learning from, or I guess he's kind of the guy known as supply demand teacher. But if you're learning supply and demand, and it's pretty much just putting boxes over support resistance, which is part of my method, but that's it's a small part, and it really feels just like support resistance, and which with a few extra rules, then you're really not learning supply and demand. So hopefully you're learning it right. That's all I can say without going into a whole lesson about supply and demand. Okay, so did I answer the question? All right, so that's the volume indicator I'm using. Okay. Next one, Skip in Minnesota. I made sure there's no last names in here. This is Skip in Minnesota. I watch your videos. They're very good. I have a couple questions. Now, okay, live trading room. I'm planning on continuing the live trading room in September. Right now, I'm taking a break. It's August. So in September, I'll be back to doing the live trading room. The cost, I don't even know off the top of my head, but it's going to be something reasonable. So that'll be on the website. Check in September, or leading up to September. I'll have the information up there. Day trading. Do I do swing trading? Do I call it live trades? Yeah, it's day trading. Swing trades, I don't really do with the room, and I don't really do in general. Swing trades for me are typically trades that I'll leave running because there was a reason to, and they'll turn into a swing trade. But no, typically it's day trading, and I do share my trading activity with the room. Yeah, so I am continuing that in September. I'll put the link in the description for the website. Glad the videos are helping. I want to be doing more YouTube videos. I had to set up on a new computer, and I did that now. The last video had audio issues. All right. Now we're good. Okay, next question. Hi, Pete. I hope you don't mind. I have included a chart of the pound Australian dollar, a trade I took this morning, and I do have the chart here to look at. Shortly after entering the trade, it took off like a rocket. It is currently in a reaccumulation phase, flag pattern. I have a small position still in the trade. Okay, and we'll look at the chart. I have purchased and watched your course a few times and other videos of yours which are truly inspirational. Very good. Glad it helps. I would like to thank you for sharing your method. I'm starting to read charts with a lot more clarity, but need a lot more practice. Yes, screen time. But as long as you are learning the right things with that time. Your thought on the chart. Okay, so here's the chart. Now, this is a 5-minute chart, so we don't have, but I think you said it was in reaccumulation phase, but we don't have the complete picture. And just to kind of, this is not typically an entry. First of all, you entered, I guess, here, and it shot up, and I'm guessing, because it looks like it's right at 5:30 on the half hour there, that it was probably news. And the fact that, this is just something I have to say first, it was probably news. And the fact that it shot up like this doesn't really confirm. Let me get a drink. It doesn't really confirm that it was some amazing entry, and that's why it shot up. I think there was a bit of luck in there, honestly. A lot of times what I say about trades when I'm in them, particularly with the room, is it doesn't have to go fast as long as the information that's coming in as time is going by is good, and it's not bad. So I don't even care if a trade takes in the first hour it hasn't really gone anywhere, if it keeps showing me things that it's going to play out and my stop loss is safe, just to kind of prove a point. So the fact that it went big and fast doesn't mean, well, it was some sort of killer entry. I think there was some luck in there, and it was probably news. I would definitely bet it was news. I bet you $1 that was news. But looking at the setup, okay, if you're in reaccumulation on the largest time frame, you said, typically I'll use the 1 hour for the phases. And we're moving up. We're not seeing a lot of weakness. So that's the first thing here, which would be shown as high volume here. We have a bit of volume to stop the progress and pull it back, but it's nothing that stands out. That's typical. So that's good. Now, on the pullback, I'm assuming this is the 14 EMA as I use, and you do see a sign of strength there. So spike in volume after really some quiet activity in this price area, but a bit lower, and you get suddenly a spike in activity that stopped the progress. It closed off the low. It's a 5-minute candle. And after making good progress down, it stopped the progress. So there is a sign of strength here. So I don't know if you noticed that. And then, again, it's at the 14 EMA. It's not nowhere. So that's our kind of first checkpoint. So that typically says buyers are pretty confident and aggressive if at the first sort of at a small retracement, 14 EMA, you get a sign of strength. So that did happen. Now, this you pointed out is a no supply, which is sort of technically maybe, but as I use them, it wouldn't be in that particular spot. No supply, to me, the no supply that showed up, okay, so we have price stop, and we actually have a higher close at this point, and we start to move up. Now, no supply, right? We're talking about supply, sellers. So testing for sellers happens into new high ground, into higher prices. As prices moving up, you're going to find out about sellers. Just like here, as price moved down, we found out about buyers. Non-existent, very small, and then as it moved lower, we found out about buyers being present. So as it moves up, we can start to tell about the sellers that are present. Now, as it moved up here, it fizzled out. That's not much of an up move, but we're working with this chart. It did close higher, the first sort of higher close in a while. And that's where the volume dropped off, which really shows selling is quite inactive. Now, if there was a bit more of an up move, we can get a little more information, test the high and all that. It's not much of a move. So, it kind of looks like also that this is 5, 10, 15, 20 minutes before news. I'm kind of going with that. It's probably news. And markets tend to get quiet sometimes and wait for that news to come out. So it might kind of have been that sort of a false low volume thing going on. But generally you have strength. So again, a no supply is here, just to point that out. Like if there is a no supply here, it's because price moved up. And then here's a down candle after higher prices are seen on very low volume, right? And moving above that would be an entry. So if I was getting pretty aggressive here trying to get into this trade, I would look for price to move up and spend a few seconds up here at least and show me this price area accepted with strength and a no supply on the way up, and then look to enter long, which you kind of did here. So it's not too different. It looks like you entered at this price area, so that's pretty much it. But as it shot up, you probably just jumped in quickly. But that's technically not a no supply for me, because that's testing technically near the support. It's very close to the support. That's where what is active? Buyers. So if anything, we're actually testing for buyers' demand at this point. And if we were to go slightly below it big time, we'd be getting information about buyers. So if we're talking about buyers and demand and that sort of information coming out of support, an area where buyers were active before, we're not really going to be talking about supply in that case. We'd be talking about demand. That's the information that we can get off of that. All right, so hopefully that clears it up. What would have been additional confirmation at this price area, again, it's almost at the support. I mean, this pattern is fractal. This could be a 1 hour chart. It's almost at support. It's very close. And even as you're getting that close, you would typically see a sign of strength to confirm. But if you touch the low of that candle, and definitely if you went slightly below, you'd want to see a sign of strength, double bottom, fake breakout, right? That sort of thing that I talk about. So this is on a trending up move, pulling back, and once and twice testing support. I actually like to see an increase in volume here on the rejection, showing demand present again at this price level as it was before, right? And a lot of times you'll see this pattern of the strength, the low volume test for sellers as you moved up, and then the double bottom here or fake breakout, and again seeing demand. And from there, once you push up into new ground over that test whole area, you're starting to mark up again because it showed a very extreme imbalance. Active demand, and inactive supply, right? And then it starts playing out, and that's typically a good entry in this price area. So it's a little unorthodox on the entry, but I wouldn't say it's wrong. And hopefully that gives you a better understanding of what went on there. And I'm betting it was probably news, but congratulations on that trade. Okay. What else? I think that's it. Also wanted to show for information on anything going on here. I have the subscribe for updates, and I don't send emails out that often. But if you want to know anything going on with sales on the courses, or even if I upload a YouTube video, sometimes I'll send it out through email. So the best thing to do, and when the trading live sessions begin again, anything. So any important information you'll get by email if you subscribe for the updates here on the website, myfxsource.com. All right, so that is important to do if you want to know about the latest. All right, guys, hopefully that's helpful. What else can we do? I was going to kind of do a analysis, but this video is a bit long maybe, so I could save that for another video. But I will tell you this. Euro-dollar, the uptrend has retraced, right? Here's the retracement on the 4-hour. What do we see? Big time. Buying. So lower prices, demand, all over this place. Now, at some point, if you see lower prices without this happening, look out because the thing is retracing more. But if you're going to constantly see high volume into new low ground, once, twice, maybe again, and rejecting price off of that high volume, it's accumulation, and let it set up for a long properly, which I won't get into right now. But if it goes into new low ground without that buying coming in, and you can see initially in a 5-minute, 15-minute chart what new low ground is going to look like volume-wise, if it doesn't show up, that buying, look out. It's going to retrace further. But right now, this is keeping it up. And again, it's likely, according to this very high volume activity, they're looking at this saying, yeah, this thing pretty much belongs, here, trying to, let me get rid of that. It's likely to make a run for the high and maybe try new high ground and see how much selling may or may not come in there. That's, to me, how confident these sellers are. Again, these buyers are. They're very confident, and they think price belongs up here. It's not going to be a large retracement. Okay, you could tell by their activity, right? It's very telling. They wouldn't be buying this much if they expected price to retrace another 100 pips before it moves up. Again, but very important. So look for the reaccumulation entries. But very important, if at any point you see support tested and, even more importantly, new low ground, and you don't see buying, look out. You'll probably get a large retracement. Draw a fib, and you might end up with that sort of thing. This fib is not even going to be right. Oh, gosh, I can't even see. There's the 618 and the 50 EMA. So if at any point you see low prices without strength, you're likely going a little further on the retracement. Look out. But you see the story right now. Very confident buying, and they expect price to go right back up. All right, guys, so that's something. But I'll look to make more videos now that I'm set up with the proper setup and got everything going here. All right. Talk to you soon. Take care.